Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good day, ladies and gentlemen. A warm welcome to our webinar for today. Our core topic for today is agreed upon procedures due diligence. My name is Letty Janse van Vuren and I will be your facilitator for the next 2 hours. The next slide, as we can see, is just about me as the presenter. You'll see where I started, what I've been doing. What I basically do is I do a lot of research and I do a lot of presentations, webinars on the latest developments, and then I do a lot of consultation work in terms of efficiency, standardization, technical assistance, whatnot. But my main responsibilities are the MCLU and then the technical alerts that we post daily on LinkedIn. Right. So the quote that I found for today comes from Auguste Comte, and he said that facts cannot be observed without the guidance of some theory. And because we are dealing with due diligence and mostly the agreed upon procedures are all about factual findings. So I thought that's my buzzword for today. What facts are we looking at? And very, very true, facts cannot be observed without the guidance of some theory. And obviously, the facts that we are observing as practitioners cannot be observed without using ISRS 4400. Right. So you'll see everything that's in this little picture at the bottom, agreed upon procedures, all of it, the buzzwords are all in here. Right. So our course overview for today is just basically all about due diligence and about agreed upon procedures. You can't have one without the other because due diligence is a type of agreed upon procedure. Right, so I'm basically going to be explaining to you today due diligence as an AUP engagement in accordance with ISRS 4400. I'll take you through the whole process. The learning outcomes, this was already on the website, so just so that you know what you'll be able to do afterwards. You're going to be able to understand what an AUP engagement is, what are the significant enhancements in terms of the revised standard. That's in a nutshell, that's your fact sheet that you can refer to there. And looking at the correct application of the standard, looking at the explanatory material, the appendices, knowing the content of the illustrative engagement letter and procedures reports, and then also be able to draft your engagement letters and agreed upon procedures. So not only knowing the content, but afterwards being able to actually draft them and use them in practice. The abbreviations that I'll be using for today is AUP, so that means agreed upon procedures, right? ISRS is the International Standard on Related Services. IFAC is the International Federation of Accountants that we belong to via our membership bodies. So if you're a SAICA member, SAICA is a member of IFAC, CIPC is a member of IFAC, CIBA is a member of IFAC, and so on and so forth. Right, ISBA is one of the two legs of IFAC. IFAC has an ethics leg and a standards leg. So the ISBA is the ethics code, or as they call it, the ethics organization. And then the other leg is the IAASB. Those are the ones that actually set the standards. So they are the ones that set ISRS. They define it, they issue it internationally, and then we adopt it in South Africa. And then IRBA I've got in here because I've got some industry-specific reports that I've included for you, and just so that you know what IRBA stands for. All right, so our table of contents, I'm going to start off with an introduction, looking at what is an AUP, and then looking at the standard categories that we have available within ISRS. And then I've sort of gone into Module 1, talking about the requirements for due diligence engagements. Okay. But a lot of this is covered in the introduction, and Module 1 is then the requirements. Module 2 looks at, okay, now we know what the requirements are. How do we now actually perform it? And which report do I issue for due diligence engagement? Module 3 just looks at the latest documents from IFAC, and I will be doing, at the end of Module 2, I'll be doing an in-depth example with you on due diligence. Right. So let's get started with our introduction then. What does due diligence mean? So my DD, It's not a bra size, I promise you. Well, it is a bra size, but today DD stands for due diligence. Okay. So due diligence is a process or effort to collect and analyze information before making a decision. So that's the process that you go through, collecting information, analyzing, sifting through it, putting it into a format that somebody can make a decision on. Right. So due diligence for us, it's a process that investors use a lot of times to assess risk, where they will look at the company's numbers, they'll compare the numbers over time, they'll compare to other competitors to look at whether or not they want to invest in a company. It is a process that involves risk and compliance checks. Okay. So conducting an investigation, a review, or an audit to verify facts and information about a particular subject. This is not in the sense that we know the terms in audit and review. For them, the public out there, an audit that due diligence refers to is really looking at the processes, measuring the processes against certain prerequisites. So does our system have the following, and then you go and you assess it accordingly. All right. So it's not, whenever you see them using words like investigation, review, or audit, it really is more, I want you to really just stick with factual findings. Okay, it's facts. It's the process of gathering and verifying relevant information about a company or person to enable the ordering party. The ordering party will be the engaging party, whoever asks you to do the due diligence or the agreed upon procedures. So the due diligence is the process that you go through of gathering information for the person who needs to make an informed decision. The ordering party, like I said here, can normally be either the buyer or the seller. If we're talking about M&As, mergers and acquisitions, due diligence has value for both parties because the buyer wants to see if they're busy with valuation of the company. The buyer wants to see whether or not they are getting a good deal. And the seller wants to see, well, what is my company actually worth? And what other factors can I look at that can increase the value? So they'll maybe include some of the non-financial side of things as well. All right, so very important, due diligence, I want you to take away from this today that due diligence is the process of going through, collecting information so that somebody can make a decision on that. All right. What is the purpose of a due diligence? Well, it's basically a way for people to reduce their risk. They want to see if something is working the way it should. So whether you are busy doing a due diligence on the ordering system or the accounts receivable system to see whether or not the debtor's aging is correct and whatnot, the process ensures that that a party is aware of all the details and a transaction before they agree to it. So there are some other examples in here. I've said a broker-dealer will give an investor the results of a due diligence report so that the investor is then fully informed and they cannot hold the broker-dealer responsible for any losses. So we get touching on two important things here. Due diligence means that you are giving information to somebody else to make up their mind. And you basically, in your capacity as practitioner, you give them the information. They say to you, we want the following info. You give them the info, you go through a process, you do procedures, you go through it, you present it to them to say, here we go, this is what I have found, you make up your mind. Okay. The types of due diligence that we've got are basically wide. Due diligence can be done on absolutely anything. But you get financial due diligence, which obviously is on numbers, legal due diligence, which we're normally looking at covenants and legal requirements and compliance with covenants and so on, tax due diligence on the tax side of things, operational due diligence. This could even be on a process of hiring and firing. You can do a due diligence on the hiring process of a company. IP due diligence, right? Intellectual property. commercial due diligence, which is basically buying and selling, IT, information technology, which is on the different processes, could be on, for instance, POPIA compliance, could be on safeguarding of information.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.